So I got something super interesting for you today. Like, it actually kind of blew my mind. You know how when a company totally tanks after some shady behavior, there's always this massive lawsuit in the news?
Oh, yeah, those headline-grabbing, stock-dropping, lawsuit-launching disasters.
Right. Well, apparently, like all those lawsuits, they usually start with just one investor, one person, not some hedge fund or billionaire, just some regular shareholder who steps up and becomes the lead plaintiff. Isn't that wild?
Totally. It's like you go from buying a few shares to being the tip of the legal spear. And like that role is actually a big deal. You're not just signing a piece of paper, you're helping to take on some of the biggest corporations out there.
Hey, everyone, and welcome back to Sue Wall Street, holding Wall Street accountable. I'm Cassie.
And I'm Bill.
Just a quick heads up before we dive in. We're not lawyers or accountants, so don't take this as legal or financial advice. This podcast is for informational and educational purposes only.
And today's podcast is presented by Levi and Korsinsky, a leading American securities class action lawsuit firm. 20 years of giving shareholders a voice and recovering billions of dollars. Go check out their website at zlk.com for more information.
All right, Bill, before we get into all the nitty-gritty, can you just hit us with the ticker symbol in exchange?
Totally. We're not talking a specific stock today, but just so we stay in the habit, make sure to always check your ticker symbols on whatever exchange you're watching. For most of these lawsuits, they're based on companies traded on the NYSE or NASDAQ.
Okay, so let's break this down. What's the actual role of shareholders when fraud hits the fan?
So here's the thing. When a company commits securities fraud, it's the shareholders, like the people holding the bag, who lose out when the stock price drops. And because they're the ones financially hurt, they've got what's called standing. That means they're allowed to sue.
Okay, but, they don't all sue, right?
Nope, that's where the class action part comes in. One person or a few people steps up to represent everyone who lost money. That person is the lead plaintiff.
That still blows my mind. I mean, I've got stock. Should I be practicing my courtroom walk or something?
Maybe, but really, if you lost money during the fraud period, you're automatically part of the class. You'll get emails or letters letting you know your rights and how to claim if there's a settlement.
Okay, so being part of the class is mostly passive, but being the lead, that sounds like bigger.
Absolutely. The lead plaintiff helps pick the law firm, works with the attorneys, and approves big decisions like settlements. They're kind of like the team captain, the face of the lawsuit. And yeah, it's some responsibility. You might have to give a deposition, review filings, or talk to lawyers regularly.
So it's not exactly binging Netflix all day while the lawyers do the work.
Not quite, but you're also not like lawyering in court every day either. It's a balance. The courts expect engagement, so it's not for someone who just wants to sign and disappear.
Got it. And what about regular shareholders, like me, who aren't super into the spotlight?
Then your job is easy. Read your emails. If you qualify as a class member and there's a payout, all you need to do is submit a claim, usually online, usually super simple.
Okay, that's the kind of low effort I like. But seriously, this seems like one of the few places where doing the bare minimum actually pays off.
Exactly. It's like click a few buttons, upload proof you bought the stock, and boom, you might get a check in the mail. Passive income from passive resistance.
Okay, but wait. If you're the lead plaintiff, do you get paid more?
Ah, yes, that's the bonus round. Sometimes courts award what's called an incentive fee to lead plaintiffs. It's not huge, maybe a few $1,000s, but it's a way to say thanks for taking the time and stepping up.
Huh. So you could go from losing 10 grand to maybe getting a chunk of it back and a leadership bonus?
Yep, it's the class action glow up. Like, congratulations, you're now both a victim and a representative of justice.
Okay, I need a second to just sit with how wild that is. One investor,
one fraud, and suddenly you're captaining a lawsuit? Wall Street better watch its back.
That's the idea. These cases don't start unless someone says, nope, not today. Shareholders are the watchdogs, the whistleblowers, the ones holding the receipts.
So, Bill, zooming out a bit, why does any of this really matter? I mean, shareholder suing sounds cool, but what's the big picture here?
It actually matters a lot. So the thing is, shareholders aren't just victims, they're like the last line of defense. When regulators like the SEC drop the ball or move too slow, shareholders can step in way faster, especially when something sketchy starts bubbling up.
So, it's kind of like private citizens doing what the government maybe can't?
Exactly. Like maybe a company's financials look weird, or the CEO suddenly dumps a mountain of stock, or a quarterly report just feels off. It's often regular shareholders who first catch that stuff and flag it. That's when class action firms swoop in and say, all right, let's investigate.
And then suddenly, boom, lawsuit?
Boom, fraud gets exposed and shareholders finally get a shot at justice. But here's the kicker. The more shareholders who file claims, the bigger the consequences for the company. If only 10% of investors respond, it's like a slap on the wrist. But if 50, 60% show up, now we're talking full-on Wall Street reckoning.
So, every claim filed is kind of like a vote that says, we see what you did, and we're not cool with it.
Yes, that's exactly it. It's market accountability powered by the people. Every form submitted is like a little slap on the wrist, and enough slaps, that's a punch.
Okay, but for the folks listening right now, what should they actually do if they think they were part of one of these class actions?
Two things. First, read your mail, seriously. Those envelopes that say securities settlement, don't toss them. And second, go online. There are official settlement websites for every big class action. Just Google the company name plus securities class action. You'll see if you qualify and how to file a claim. Usually takes less time than ordering takeout.
And what about being the lead plaintiff? How do you even do that?
Usually, when a fraud is first uncovered, law firms announce an investigation. That's your window. If you've got a decent loss, say more than a few $1,000s, and you're willing to be involved, you can reach out to the firm and say, hey, I'm interested in being lead plaintiff. It's that simple.
Dang. So being the lead plaintiff doesn't just mean you're suing. It means you're standing up like, I'm going to be the one to steer the ship and maybe pick up a little incentive check too.
Totally. It's not for everyone, but for the right person, it's a powerful way to turn a bad stock experience into real change, or at least a little corporate slap on the balance sheet.
All right. Let's hit the big picture again, just to wrap this up. These lawsuits, they only happen because regular people take action, right?
Right. Shareholders don't just